Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Happy Friday. Welcome to today's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We're all in a good mood, I think, because it's Friday and we have a lot to discuss. We're going to talk about the wild ride after hours in Nvidia. We also had a couple more earnings reports to discuss Pinterest and BIDU. And Deere, I believe. We're going to talk about the acquisition this morning that HP is acquiring CRAY. And we'll take your questions from our chat. Our guest today, Jerremy Newsome, CEO of reallifetrading.com. He will join the show at 8:35. Joel, what's happening here overnight? Are you long Bitcoin yet?
No, we got big red on the screen here, down 20 handles at 28.58 even, continuing to make new lows on the session. No good support. Thursday's low, 28.40.50. We're already through the intraday low from yesterday at 59.25. So basically almost wiping out all the gains from the intraday yesterday. We'll see if we get down to 28.40 on the downside. Crude having a good day, though. Crude up 42 cents at 63.48, rebounding from the multiple lows in the $60 handle, lower 60s. Gold in the green by 20 cents. That gold rally didn't last long. 1286.40 is where that's trading. Silver's in the red by a little over 6 cents at 1447.5. And Bitcoin down $702.50 at 7,200. Is it the rant that Dennis had yesterday?
Nobody could answer the question about the scarcity argument, so they decided to start selling it.
Yeah.
No, obviously it's not. We know what the headline. What was the headline that drove it down?
A $35 million sell order on Bitstamp. That's what they're saying caused it to fall. Is it just
somebody sold 35 million worth and it's got to fall how much? 10%?
Yes.
Holy cow, that sounds liquid. Can't absorb $35 million worth of selling, but it's going to be the world's future currency. Yikes! That's all I'll say to that.
Yeah. I think you should put that out on Twitter, Dennis.
I think if you're going to be the world's future currency, you're going to have to be able to absorb a $35 million seller. Moving on. Nvidia, holy cow. I tell you, this has been the worst earnings season for me ever. I think from an not from a trading standpoint. Trading has been going well. From an investing, like my long-term retirement account, which has Nvidia, and it has, I don't know how many other stocks. It seems like every other day I'm getting a stock that reports in my portfolio because I own like 100 stocks. There's always one almost every day. And it's always going down. None of these ever go up. I know Twitter went up for me. That was one that went up, but it's already leaked the gains. But
did you ever get rid of that?
No, I'm still on Twitter. Long term, Joel. Long term. That was a trade that turned into an investment because it was going well. Anyway, I still like the Twitter story.
Complain about it.
I know. I'm just a complainer. My glass is half empty all the time. Anyways, let's talk Nvidia. Stock was doing very well. It was a nice quarter. It was trading up 12 points last night. Tidy little 8%. I was like, okay, finally one's working for me. And then they pulled the rug out from under it on the conference call. Spencer Israel, what did they
Right. Well, the headlines were good. So first it was good, and it was bad, and it was good, and now it's bad. So the
you got that?
The numbers, Q1 adjusted EPS, 88 cents, beat the 79-cent estimate. That's a good number. Sales, 2.22 versus $2.2 billion. So they beat both of the Q1 estimates on EPS and sales. And their Q2 sales guidance came in at $2.55 billion, which was itself a slight beat on the estimate. So those are good numbers just from the release. And then from the conference call, I believe it was the CFO. Yeah, it was the CFO who was talking and gave a quote. I'll just read it to you. Our Q2 outlook is somewhat lower than our expectation earlier in the quarter, when our outlook for fiscal 2020 revenue was flat to down slightly from fiscal 2019. So basically saying, while our outlook still beat the expectations, it was lower than our own expectations were a couple months ago.
And it's getting worse. It sounded like it was getting worse from their lower expectations before. So, anyways, as soon as that comment happened, I guess you got to listen to these conference calls. I was not, but I was like, Nvidia's imploding. What's going on? And then you go look at the headline. But I don't know how much time you have when they say something like that. I'm assuming you had a little bit there because the stock, didn't trade straight down to 160 bucks. It traded down to about 164 quickly, bounced up to 166, 167, and continued just to leak the entire after-hour session. Obviously, it's down here this morning. Market raining on the parade a little bit as well. It was trying to hold on to a slight green last night when the market closed, but now that the market's decided to implode as well, Nvidia is down significantly too. So these conference calls, when they say comments, that's basically a lower guidance comment or a weaker outlook. Never going to be good. And they've given it all back, and Nvidia is now trading in the red.
Dennis, do you when these announcements come out and stuff? I know you're looking at the price action and everything. Do you ever pull up like a daily? Do you ever have time to pull up a daily on something? No.
No. It's sometimes up because I'll bring it up and I'll bring it in and then it'll populate, so it's over there. Am I trading off of the daily? Maybe once, when you're looking for a level, like you're going to say, I think, Joel, is that where is it going to come down to? Because I know we have 2-3 lows right there in that 157 area. So yeah, I would say yes, I do that, but I don't like when I see a negative headline and I'm quick, I hit the bid. I don't take time to look at a chart or anything. If you're taking time to analyze charts, you're missing the bid. Now, again, I wasn't trading Nvidia last night. I was doing other things, like I was trading stocks. So I was late to this headline there. So it wasn't like you can just turn around and, I'm not going to turn around and hit a 165 bid. I missed 171, 170, 169. So I just wasn't on that headline. But if I'm on the headline, like seeing a breaking headline from the news wire, I will hit the bet immediately, regardless of what the chart looks like if it's negative, because it doesn't matter at that point in time. It doesn't matter what the chart looks like. Stock's going down. Now, it does matter after the fact, like you're going to say. Just give us your thoughts here on Nvidia after the fact.
Yeah, because I had it up. I had it up on my screen, and who cares about the report, right? You just want to look at the price action. And I saw it take off, and I just said, man, I want to go to the dailies. And I went to the dailies right away, and I saw a double top at the 170, 150 area. And this was going back on just May 9th and 10th. And there was highs in the same area. And I'm thinking, I'm like, Denny's all over this, man. He's out there. This thing is not going to trade 170, 151 because I thought you were, and then it went up there, it touched it, and went up there, it touched it again. And obviously, using that as a place to exit long. You have no idea if you're going short or whatever, but it was just interesting. I was talking with my brother-in-law too, and he's doing some pre-market and after hours trading, and he'll do it to exit something. And he talked to me about a couple stocks that he had for trades, and the prices that he got in the pre-market and after hours, you couldn't touch them, during the regular.
You get the best prices in the pre-market and after hours typically. And it's the most risk too, but you're right. When you're looking at just exiting a position, if you've got something on, you use those pre-market after hours, especially that initial spike. How often do we talk about this on the show? The initial spike took you out to, a ridiculous level. And keep in mind stuff that Spinner talks about what was the straddle going for? What is the expected move? Because a lot of times it gets right to where the expected move is supposed to be, and then it finds sellers. And that's not just, for reasons. That's because, the people who own the calls probably are selling the stock against it at that point in time. So, the market makers are trading these things too, but there's also traders that are trading these options. And there is some ones that are trading the stock against it as well. So being aware of those premiums to a certain extent of what the premiums are going in will sometimes dictate how far a stock is going to move potentially on some of these initial swings. And if they overshoot on these initial swings, sometimes they're good fades. Now, that doesn't always work. Sometimes we see stocks go and they blow out, and obviously expected move. But a lot of times those expected moves do come into play.
Yeah, and just think about the 161, 162. For, all the calls up to 170. I actually don't have that platform up, but I'm sure you paid really a huge premium for any.
I'm going to look right now, just because it's a fun exercise. So we'll look at where they closed. Obviously, the options aren't open, but we can look at where they closed yesterday and just look, for instance, the May. Now I can't see it up here either. My platform for some reason isn't loading up. Okay, yeah, I'm going to grab it here. 170.
Oh, what's
Oh, there is it in 2.5 point increments. So 167.5 was going. Well, it was widespread. It closed at $3. So I mean, that's why it's so tough to play options. The 162.5 was 530. So just for the call. So you're 167, 168 almost break even on that. But then if you added up the puts, I mean, the expected move looks to be was about $12. Amazing, eh? Expected move was about 12.5 bucks. And amazing that's gets on about $12 and stalls out. It's funny how that stuff works.
Yep.
Yeah, Nvidia, Spencer saying hit within 50 cents. Its expected moves are very useful in after hours trading. So, are you going to come in, you're going to, initiate a short there because it's a little bit gutsy. I mean, it would have worked last night, but exiting a position there at the expected move, I think works a lot of times. So I if you're long the thing and you're looking for an out, I was long the thing, long-term portfolio, but I wasn't looking for an out. And, this wasn't something I was looking to dump. But if I was, on for a swing trade or taking something through earnings, I mean, why not? Look at that expected move and say, okay, it's 11, $12. It's what we just moved. That was the expected move. It might stall out here. And it did. And then obviously you had the bad headline and reversed and went the other way. But these expected moves really come into play.
Yeah, those guys are smart. They do their homework. They do their math. Let's see, just looking at Nvidia here, we're trying to find some support. Your pre-market low comes in at 158.25. You're just about 75 cents above that. Boy, I mean, good area to test here. 157.5. We'll keep an eye on that. Three of the last four lows are right in that area. So critical, very important support here for that to hold off the open. On the upside here, I mean, it could very easily go green. 160.19 was the close. Let's see what happens. Just use your daily highs, 61.91 and 63.46. But big fall here. Also, anybody that caught this in the in the after hours, after the initial plunge of the conference call, just hung out at like 162, 163. Come on in, it's fine. And then you got another flush this morning. So I think it's gonna be hard for this to do much time into one.
The commentary just wasn't good.
Yep.
So the question is it, priced in a lot of negative expectations? For sure it had. Like TT Mac making a good point. The revenue still fell 30% year over year here. So really, the business has been suffering here. We know that. Expectations were simply too low, and that's why the stock popped up. I mean, if this was just coming in and this had run up into the quarter and this was, had higher expectations, they would have slaughtered it on this report. Especially after the conference call, with, the commentary from that. But it's only down $1, which is actually holding up quite well. And that's simply because expectations were too low. So what happens here? Does it take out the triple bottom here? I'm going to call it a triple bottom. It's kind of a little sloppy triple bottom, but 157.41. Does it take that out? Maybe it does. And then you have a slippery slope probably down to the 150 area. But I don't know, just like in Intel, I don't know if there's a reason to be a hero here. Again, talking against my buck, I'm going to stick with the long-term investment because I still think, long-term, if I look and you got, Nvidia's and you've got some of these chip stocks in your long-term portfolio, I don't think, chips are going away. I think if you're putting this stuff and you're going to sleep on it, not just sleep on it overnight, but sleep on it for about 20 years, 10 to 20 years, I think you'd probably be happy it did that. I bought it originally at 150. I'm very disappointed I didn't obviously sell when I got up to 190, but you're trying to separate trading from your long-term investments and you can't keep trading your long-term investment portfolio. It's what I've been doing wrong.
I just want to say with regard to the conference call, it's just so tough though to try to figure out some sort of sentiment from the call because this report, Nvidia's out at 4:20 yesterday.
Yeah.
Conference call starts at 5:30.
Yeah.
And they can go like a half hour or more, right?
Go a long time listening to these things.
Right, they can go a while, and first you've got the CEO remarks, the CFO remarks, the analyst Q&A session, and they're really freaking dry. And so to try to discern, I mean, they can be interesting if you got Elon Musk on it, but they're usually pretty dry. So trying to discern like one comment that could, reverse sentiment is it's tough. It's so tough. And
it is, and this is why I've went through this process. I mean, I've been trading after hours, and trading news events for 10 years, and I used to listen to all the big conference calls. But for the exact reason that you're talking about, I can listen to 30 calls and maybe get a trade off of one. So yeah, in hindsight's 2020, I wish I would have been listening to the Nvidia call, and I probably would have been able to hit it maybe above 170 last night, and obviously make some money on it. But you listen to so many conference calls that you don't get any information from at all, and they are dry. And then it's not only that, I mean, how many things can you listen to? Because you're listening to,
Right.
Obviously we've got Charles over on Benzinga shouting out some news. I've got him on. I've got a news reader that's squawking me stuff that's reading it directly to me in an automation form. And I've got CNBC on. So how many things can you listen to? And you got a conference call on? Are you really listening to anything when you got 4 things on? So I like to trade breaking headlines. So I'm like, it's very important to me to be listening to the breaking headlines. Is why, Charles does a really good job of that at Benzinga Pro, of, squawking out the major breaking headlines. And Charles, I believe, squawked out he will squawk out stuff from the conference calls too. But, it's difficult to just listen to every single conference call and then, think you're going to get, these Nvidia trades off of every one. You're going to listen to a lot of calls and waste your time. So it's how much your time is worth as well. So I just, from my experience, it's difficult. And then you might miss it. I mean, you could either, they're saying a whole bunch of things, you miss that comment for whatever reason. The 2 seconds it takes to make that statement, I mean, it's responding in seconds. So, yeah, if you're really quick, maybe you can get a 171 or 170, but it's difficult to sit there and listen to the whole thing trying to get, 1 second comment that might move the stock.
Because so much of it is stuff that you could have already learned from the release, right? If you already read the release, a lot of it they're just repeating what they've already said.
Most of it.
So how do you not?
And it's dry.
How do you not zone out when that's happening?
That's it. You're exactly right. You do, so and that's why as a trader, I'm zoning out on this stuff. I mean, if you have, if you're a high frequency level and they can listen to, every single thing coming through, but they screw up too. I mean, you can, as a computer, it can misread or misunderstand something that it heard, and then make a bad trade off of it too. So, that's a difficult thing. That's a difficult program to write. It's one thing, to trade off a news headline and read that. It's another thing to trade off of, to have a, a high frequency trading program, trading off of something that is being said. That's a difficult thing to write. They've got to obviously interpret it. They've got to scroll and get it right, and then interpret it right too. I mean, that's why you do see a little lag usually when somebody says something on TV, because think of all the money that's being spent on high frequency trading. They've not perfected that yet. That is a difficult thing to do, to perfect something that somebody is speaking. It's a tweet is easy. It's machine readable stuff is there, but the verbal part of it still is not perfected.
All right, let's get to some other reports here, and we got some other disasters out there.
It's just a disaster Friday. Let's do pin interest. I love that. Pin interest.
Pin interest, ironically.
I'm going to call it that forever now. It's going to drive my wife nuts because she'll go on Pinterest, and I'm going to start calling it pin interest. I'm like, what'd you see on pin interest today? It'll drive her crazy.
All right, the report was out yesterday after the close. Q1 adjusted EPS, they lost 32 cents, only estimated to lose 11 cents, so they missed that number there. Sales of $201.9 million versus a $200 million estimate. So a little bit higher than their sales estimate there. They guided fiscal year sales a little over $1 billion, which is in line with the estimate, and their adjusted EBITDA loss of $45 to $70 million for the year.
I traded this yesterday, actually, ahead of the report. We talked about Zoom. We talked about Pinterest. We talked about a bunch of them looking nice for little breakouts there. It would take a lot of guts to take it through the report, so I did not take Pinterest through the report. But Zoom opened right up near the lows, ran $7. So that breakout worked yesterday. Pins was the same thing. I bought it right near the open, and it was up $1. And it helped that Kramer came on, and that's really what kickstarted it. Kramer came on and said he was going to have him on Mad Money, and that you can see that big spike from like 28.5 up to 29.5 in there. So I played it out a little bit yesterday. The reason I was just buying because I thought it might run up ahead of the number, and it worked. Now, if you hold it through the number, ugly. So glad I didn't hold anything through the number because this did not work out afterwards. So I don't know. It's now breaking down through the lows. I mean, you're getting back to where this thing. What was the original pricing on the IPO? Do you remember, Mr. Israel or Joel? Do you remember?
I don't remember, but I can look it up in like 5 seconds. Hold on.
Okay, well, we like that 5-second
You're
lookup.
you're basically getting just a reset here, almost from the IPO day. Your opening price was 23.75, traded up to 23.8 or 25.18 that day, with the all-time low being made at 23.05. Haven't hit that yet in the pre-market. Pre-market low is at 24.74. So we're a buck above that. I don't know. It kind of feels like someone's in here trying to pick up some stock. At least it stopped going down. So I don't know if you're going to see that pre-market low. If you do break through that pre-market low, all-time low at 23.05, and they settled its first day at 24.40.
$19 is the IPO price.
Yeah, okay. So we're a ways away from there. What's the market cap on Pinterest now? Just curious, like trying to get a gauge for like.
Well, as of this very second, I couldn't tell you, but as of the close, it was $16 billion.
It's still worth a lot of money, man.
Yeah.
I don't know. Like I just compare. I guess some of these things are worth some money. There's people that go on these things, but it seems like all these like online sites are worth 15-20 billion dollars, and you think at the end of the day they're not going to be that many that are going to be worth that much. But anyways, I don't know. Long term, that's just a scary valuation for me.
You think we're what's our bet? Could we IPO?
Yeah, we should. We have a pre-market. We talked about this. Benzinga, let's do this, guy.
Find my way. We do a direct listing. We don't need to. We don't need to raise any more money. We're good. But
we just want to get rich.
Right, exactly. But back to the Pinterest thing. It's funny that Facebook has this reputation where if they can't buy you, they'll just copy you, right? Which is what they did to Snapchat. They bought Instagram, they bought WhatsApp, they copied Snapchat. I think they've tried to copy Pinterest, and I don't know how well the Facebook Marketplace has worked out for them, but it's something. It's a copyable thing, right?
Yeah. Well, that's it.
Right.
I think it is too. I mean, so many things, that these businesses that are coming out are, I don't know, there's patents on these things or what, but I mean, it's difficult. I mean, when you look at these online businesses, a lot of them, and that's why, Amazon continues to, come into people's spaces too. Any business that they can somewhat copy, they do it. So, I mean, even Amazon had a headline last night. Did you see that headline that they're going to do, they're buying a piece of that, what is it, Deliveroo or whatever? Did you see that headline?
Deliveroo, you got it right. Yeah.
Did I say it right? Deliveroo?
Got it right. That's it.
So, and that's a food delivery company, right?
Yep. Over in the UK, I believe.
Yeah. So I don't know if that affects Grubhub. I don't know if that affects. I haven't saw Domino's Pizza trading down on it. I don't know why Domino's Pizza, but it did trade down on that initial headline. Grubhub was getting hit a little bit on it. GRUB. I mean, they just attack everything. the one thing, what's he call it? The Death Star, or no? What does he call? What's he call Amazon? Not the Death Star, but a Death Star would be a good one too. But it's kind of funny, anyways, just because it keeps attacking everybody's businesses. But
let's get another disaster report in here. How about BIDU?
It is. That's ugly.
All right, BIDU. This is yesterday after the close as well. Q1 adjusted EPS for BIDU 41 cents versus a 53-cent estimate. Sales of 3.59 versus 3.52 billion dollars. So the sales beat, but the EPS was a big enough a miss, I think, to matter. And the guidance that they gave, they also reported a $1 billion buyback, and their Q2 guidance, the sales guidance, was also light. 3.74 to 3.96 billion is the range that they gave.
Wow.
And $4.25 billion is what they was expected. So light on the sales guidance and light on the Q1 EPS.
You think about all the Chinese stocks, and some have been beat up. Nobody's been beat up worse than Baidu. This stock was $284 a year ago. It is now $135. So it is a 2-for-1 official 2-for-1 split, except you didn't get the extra shares. Now that it's trading under $140, it's $135. This thing has just been ugly here for a long time. I mean, you start looking at the longer term chart, you're getting back into 2016 levels here now. We're thinking about 2015 levels. The low in 2015, which was the flash crash low of $100 even back in August. I remember on the flash crash, I think it was August 26th, if I'm remembering right. that when we had the ETF flash crash, while a lot of other stocks went down that day too. That was the flash crash low BIDU of $100. I mean, this stock has had a world of pain here for a while. At a certain point in time, you wonder, if you analyze it, if there isn't some value here somewhere. But I don't know, man. Trend is definitely not your friend.
Interesting area though. If you've been waiting to cover short since October of 2015, here's your opportunity. You had a 135.31 low, and that's pretty close to where we're trading now. After that, it drops to 130.77. This is based on the monthlies here, and then that August flash crash low was down at $100. I don't think we'll see that today, but there is some monthly support here in the 130 handle. Much better place to cover short, of course, than try long yet. But relative strength being pointed out, absolutely horrible on this.
Horrible. Best of breed. This is worst of breed for the Chinese stock. This has been the worst one of the big guns.
Let's just keep the disasters rolling. John Deere.
Wow. Give me some hope here, Joel. Anyway, this is a bad earnings day here. Deere down $7. You know what? This is getting hit a little bit ahead of the number last night. They were right. They're right again, down 5%.
Yeah, but at least this isn't in your portfolio, at least to my knowledge.
No, I know. Actually, the only one in my portfolio today is Nvidia.
Okay, so Q2 EPS for Deere, $3.52 versus a $3.61 estimate. So they light on that number. Sales 11.3 versus 10.1 billion. So that's a beat. So a mixed second quarter report. They guided that their fiscal year equipment sales growth would be 5%. They cut their fiscal year sales growth overall from 7% to 5%. And net income guidance was lowered as well.
Ugly. You got lots of support down in the lower 130s, so you're not that far away from here. And we've had quite the move from, like 2 weeks ago. I mean, this was $165 stock. So you're starting to get to a point where I think you'll find some buyers here in the lower 130s. So this isn't one that I'm actually, I don't know if I'm coming in. I don't like catching the fallen knife on day one. But if I was short this thing, I think I'd be bringing it in here.
139 is your last print. That's down $6.99, nearly 5%. You see the lower 130s. I see two monthly lows, and this is not going too far back. In November and December of last year, 135.60 and 136.13, couple monthly lows here. So if you're looking for more, those, you want it to get down to that area, probably have some sellers off the open. But
yeah, it might be worth a shot.
If I was short, what's the market right now in it, Dennis?
It's wide. Well, I want it 138.70 to 139. So you can, I don't know if you got a couple thousand shares, you might have to work it a bit, but I mean, at the open, it's probably going to be able to get you out of your trade. I mean, I think you're right. The 136, 137 area. I think if I was short, I'd be bringing it in here. I don't know. Like, it's such a scary market to just say, okay, well, this is the bottom here on, and this is obviously, a stock that could be a trade war stock here too. I mean, if it continues, I mean, we know Caterpillar is under pressure as well, and the CAT chart doesn't look good either. CAT's starting to get down, not to the lows of the move. We got into October at 112, but it's starting to look ugly here again too. I mean, we've been talking about this. Some individual stocks on the charts do not look good. We've been talking about this for a while. Despite the market holding up, it's been a lot of rotation that has held us up. It's been a lot of rotation to some defensive names that have held us up. I mean, the utilities have been very resilient holding up, but stocks like Procter & Gamble, new all-time high yesterday. I mean, the market is still playing full-on defense. Look at Coca-Cola. Coca-Cola has been tearing it up, and it's back at 49.5 here now. It's a defensive stock. Market is still playing defense, so money managers are not risk on here yet. I mean, some of the dips have been bought in some stocks, but the earnings season, a lot of it has been disappointing, and you still have the worries of the trade war out there. So really, it's been rotation that's been holding up the market overall.
And I just want to just real quick, scenario setting. Like we do here, that 136, it's $3 away. You never know what's going to happen. But Dennis, you set up one hell of a scenario yesterday, and I didn't think it had any chance of getting near 104. But did you see the high in Walmart yesterday?
Right on the kisser.
103.90.
Yeah, we set it up, and I know what, I got sidetracked, and I wish I would have participated. Hopefully some people did, because I said if it got up near that 104 area, it'd be nice to try from the short side. It like kissed 104, 103.96 just below it, and then gave it all back. So these levels work sometimes, guys, and they ran up. It opened, it kind of came down, and then it had a hard run here at late morning, or actually, let's just after the first hour or whatever, and try to challenge the 104. But these numbers come into play when you get these big institutional sellers at these certain levels. They come into play, and that's what happened there too. So you got to have those levels out there when you're trading these stocks, because these technicals do work after the fact as well. 104 was big on Walmart, and failed there again.
Yeah, and did we get some sell imbalances there, Dennis? Here,
let's go check it out. I mean, this is option expiration Friday, so you're going to see more volatility. Yeah, they're all to the sell side. Not huge, but not small. Again, because this is option expiration Friday, the imbalances will be volatile. They don't mean as much because you have big institutional players jockeying the stocks against their open option positions. So, I mean, you're going to see a lot of volatility, at least from the imbalances. But it's an ugly day. It's an ugly day for the market here right now. I mean, do we have a real catalyst here for the overnight sell-off?
Yes.
We haven't talked overall market. What's the catalyst overall here?
I'll give you one guess. You only get one guess.
Trumpster.
Not so much Trumpster, but China says, things aren't going good. Spencer.
No, trade war. So it's all trade war now.
Oh, it's true. I thought you were going to say though that the people were not excited about the Preakness. I thought that was your reason for the overnight weakness. But it's just trade war.
You mean the bleakness or the Preakness?
Oh, Joel, you're the horse lover. Don't
get me started.
Is that this weekend, the Preakness? I don't even know.
Yeah. Do you
Sunday? Saturday?
Saturday.
Always Saturday.
Do you want my pick now, or you want my pick at the end of the show?
We'll do it at the end. We'll do it at the end.
Well, okay. We'll get your picks.
Yeah.
Okay. All right.
Is the horse going to stay legal, the one that wins?
You don't steal my lines from me, okay? Back in your cage.
To the glue factory.
Okay. To
so
HP.
They don't like that. It was a joke. It was a joke.
HP this
what
morning.
movie is that from?
What's that?
What movie is that from?
Oh, I don't think it is. I think it's reality.
Yeah. HPE.
All right, that's just quickly changing the subject on this.
HPE making their biggest acquisition in 2 years.
It was a joke. Sorry. CLUU. I'm getting myself in trouble here.
Glue Mobile. HPE making their biggest acquisition here in 2 years. HPE.
They're along the horses.
All right. HPE is buying CRAY this morning, $35 a share in cash, comes out to $1.3 billion in total value. This report was out last night, but the confirmation and price did not come through until this morning.
All right, HP getting a bit on this. Look at the acquirer actually going up a little bit. CRAY is trading up. It's cash deal, $35. So that's all you need to know. 34.75 risk. I was putting a 25-cent risk only that this is going to, go through. So it looks like it's going to go through. CRAY. I don't know if we're just looking at the chart ahead of time. I mean, it was drifting up here. So there was maybe some rumors. Was there rumors about this before?
Like before last night? No, not
just because the chart had been obviously near highs. I mean, anyways, okay, so you get rewarded, bought out, $35.
What do you think? You think it just the way there's no premium in here? I mean, who else would want them? I mean, is there any? I know this is a similar scenario that that we had not much premium in it. So who knows? I really don't know much about the company, so I don't know if there'd be another suitor as well. Let's just take a look at HPE is the acquirer, and it's been getting beat up. It's up 22 cents, but let's see. You got a gap at 15.18. Some air in this up to 15.18. We'll see if it could fill the gap today.
No, I don't like it. I think, the acquirer is trading up below a big week down day here. Nah, maybe get up to 15 or something like that, but I like it better as a short than a long.
Wow, BIDU just 134.86.
Now 130, Joel, it's coming.
Oh, no, I said set up a scenario there. Woo. I guess you get done on your 136s here. Maybe
this is free fall. I trying to catch that falling knife. I get cut a lot of times.
Yeah, definitely.
We had a couple other that are chat falls. IQ reported and HUYA reported as well.
They both did. We'll talk about those after we grab our guest right now. We're
No,
gonna
8:45.
Oh, 8:45.
Yeah.
Oh, you curveball.
Threw me off here. Okay.
Curveball, Joel. Who's the guest? 8:45.
Jerremy Newsome.
Oh, Jeremy. Nice.
All right. So
Anyways, okay.
all right. So we'll do the IQ and the Huya, and then after that, I want to go to Overstock if we have time.
Overstock. Is that still a stock?
Okay. So
Barely.
IQ, we'll do that first. Earnings yesterday, a 35-cent EPS loss last quarter versus a 48-cent loss estimate. Sales of $1 billion versus $1.02 billion. Their Q2 sales guidance was in line at $1 to $1.1 billion. They're all trading down here. I don't know what you can say besides
They're all broke.
They're all trading down here.
I mean, BILI reported and it was trying to trade up on its report and then it gave it back too. These things are all broken stories here right now. Do they get another lift here again eventually? Maybe, but again, trying to catch a falling knife. The HUYA report wasn't that bad, and it's trading down too. So victim of reporting on the wrong day for sure. You know what? HUYA I could get some. It got down to that 18 level. That's a big support level, and I'm not saying it's going to get there today. I'm just saying if it ever got down there, maybe that's a level you think about. But I'm not be here on buying any of these things. I'm out.
Just skimming along the pre-market low here. Your pre-market low at 1875, just hovering above it here. So I don't know if the damage had stopped yet. That's taking out your low from February at 1940. I mean, this thing got down in January to the lower 14s, 2 monthly lows, 1435 and 1439. Oh, boy, I tell you, that also was near the area where it came out. That was at the $15 area. But looks like someone's bringing in a little stock here at the 1875, 19 even, in order to fill the gap from yesterday's trading. Not too far away, 2018. So 20 is going to be your resistance. And then did you do the Huya numbers too?
Huya was essentially in line there. Let me pull the numbers back up here. Well, their EPS, oops, wrong place. The Huya EPS was in line. Just lost them. There we go.
It's fine.
It was 9 cents, which is what the estimate was. The revenue beat at 243 versus $225 million. So it was good.
Not good enough on a day like this though, where they're whacking stuff, especially Chinese stocks. So it's down. Like I said, if it got down near 18, maybe I'm interested. I'm not jumping at 21.
Yeah, opening right at the low from yesterday. Right now, we 2085 low, 2097 close. Got to get green, get above 21. Challenge Wednesday's close at 2151. There are some lows here in the $19 handle. I see 1960 and 1991. So there's your first area of support, and you still buck away from there. So I think you still got some indecision on what to do with this one after the report.
All right, I want to talk about Overstock now, because if you recall,
Overstock or understock?
A couple of days ago, SEC filing came out that the CEO Patrick Byrne had sold some stock. I don't know who he's hearing from, but whoever it is pissing him off, because he released a statement this morning that is kind of wild, honestly. And the stock I saw was moving. I guess it was moving off the statement, but basically he came out and released this whole long statement about why he sold stock earlier this week. I had no idea that shareholders would demand explanations of why and how I might want to use my cash derived from my labor and my property to pursue my ends in life. Not once have I ever asked a shareholder for his reason in any decision he made.
So angry.
He's very angry this morning.
So angry.
Yeah, I don't know what. I don't know. No, he's no way.
He's just angry. They don't have any.
I don't know what.
Nobody wants this job, Joel. The stock is in trouble.
Pressure he's getting, but whatever it is pissing him off this morning. And the stock did trade a little bit off this.
This used to be a Bitcoin play. Bitcoin's been straight up for 2 months. This is straight down for 2 months. This guy's got nothing going on. It was a Bitcoin play, wasn't it?
Yeah, it was the Bitcoin play. He
obviously was not working with Bitcoin now. Bitcoin in the last 2 months is straight up. This is straight down 50%. Did they short Bitcoin or something all of a sudden? They got this wrong. Anyways, This story, this it's $10 is big for it. It's got a hold. I don't think it does. This story looks completely. I don't follow the stock close enough. These technicals are terrible. You look at the weeklies, it looks terrible. You look at the monthlies, it looks terrible. Nothing looks good about this. I mean, this stock looks like it's just drifting down, and the CEO saying stuff like this. I want no part of this whatsoever. All rallies to be sold, in my opinion, in Overstock. That's my opinion.
And let's see here. It's just trading down a dime here. Yesterday's low, 998. Not getting not getting any kind of bounce here. I think he sold it like in the open market, was it?
Yeah.
And I think it was at 1250, so he got a pretty good sale off. But you got to be thinking, he's thinking, man, not much value left in this company. Really, it's come down hard. I can't get. I believe this is an all-time low for it. Maybe we were in this area before. Let me see. In 2000, pop up here. Let's see. Your low in 2016, 1003. So boom, all-time lows here. Not good.
All right, 8:41. I guess we got a couple minutes before we're gonna grab Jeremy. So I don't know what else.
Just run through because we're gonna run out of time. Go to the ratings really fast.
Hey, you know what though? Before I get to that, Trump came out and said that EU and Japanese auto tariffs have been delayed for at least.
Where is that? I'm looking at the Trump Twitter feed. I don't see that tweet.
I don't know if it's in the statement. It might not be in a tweet.
Oh.
Okay.
Here I am. Spinner just said that, and I'm like looking at his Twitter feed. I was like, I don't see a tweet. All I see a tweet is about crooked Hillary.
So it's from this is from Bloomberg here. Bloomberg.
Okay.
Yeah,
Okay.
Saying that tariffs are delayed 180 days. So on that.
Because the market's going down.
I
don't like the market going down. He's day trading.
All right, you want to go to
goes down? I delay tariffs. Market goes up. I put on tariffs. I'm the fader.
All right, you want to go to ratings here? We can do a couple ratings this morning.
Yeah. What do you got for me?
I got upgrades to Foot Locker and Under Armour. Under Armour upgrade at JP Morgan to overweight. Foot Locker upgrade at B. Riley to buy.
The Under Armour will move because this hasn't had some analyst love in a while, and this one does move off analyst stuff. So you're getting over 20 this morning. You're coming into retail earnings season here too. So some of these retailers that have really been beat up. I mean, we've had Walmart, so we're right in. We're going to get into the thick of retail earnings season, I would assume, next week. Some of these stocks are coming, so sometimes you do see some run-ups into these. So as a relative trade, like I mean right now the overall market's not helping anything, but from a relative perspective, I think some of these retailers might start to show some life from a relative perspective, meaning long retailers kind of short S&Ps as a hedge, but just ahead of the earnings season I sometimes play that. But you get some analyst love here this morning. I will say $20 on UA is significant though. Yeah, nice day yesterday. Let's see what it does. Can it get over 20? I'm looking at the UA, not the UAA. I mean, you can trade them both, but if you look at the UA, $20 looks big.
Yeah, it is. And just a few days ago, you had a couple highs right there at 20. You did sneak to 20 and a quarter, but I think for this rally to hold, I don't want to see this at 1970 or 1980. Absolutely has to hold $20. If you get a little bit more out of it, you can hold 20. 2047 was your high on May 3rd, and then things really open up on that. But very important to hold 20 off the open here for Under Armour.
All right, 8:44. Let's take a quick break and grab our guest today, Jerremy Newsome. He is from reallifetrading.com. We'll be right back in a moment here with Jerremy. All right, and as promised, we are on the line with one Jerremy Newsome from reallifetrading.com. Jerremy, how's it going down in Nashville this morning?
It's going amazing, Spencer. Thanks for reaching out, man. Always love chatting with you, bros.
All right, so let's chat. First off, I want to mention before we get too deep into wherever this conversation leads us, if you haven't heard by now, Jerremy Newsome will be one of many people and we've somehow convinced to join us in June at the Benzinga Trading Summit in New York. So we're looking forward to that, Jerremy. I hope you're ready to go so in depth on your trading strategy that people are going to want you to shut up. That's how in depth you're going to go.
That won't happen.
I will probably get kicked off the stage.
Okay,
yeah,
there we go.
It's gonna be incredible. And as far as I heard you're gonna be there. Is that correct?
Oh, I'll be there. I'll be
Yeah,
there.
like 96% of the reason I'm there is to meet you in the flesh.
There we go.
So.
That's it. Forget Dennis. Dennis who? Joel who? No.
It's going to be incredible, man. Yes, we'll be trading live. I'll be there, and the market will be open that day. So that's again that's the 20th, and market open. It'll be live. We'll be crushing it. Probably placing some trades right there in front of everybody, and it's going to be really a wonderful event.
All right, we're on the line with Jerremy Newsome of Real Life Trading, and we still got the PMP 50 good, so that check that if you're looking for a discount on the trading room ticket. But before we get to the markets here, Jerremy, I just want to talk to you. I mean, you know how important psychology is to trading, and you left me a message on Monday. You were a little bit beat up. You had a bad day. Like what do you do? Like, do you pour over the trades, what you did wrong, or, what's your method for kind of like shrugging off that bad day, make sure it doesn't affect your psychology?
Yeah, it's a valid question. And I will say, Dennis, also, thanks for the love on Twitter. Dennis is like, hey, man, we all have losing days. Thanks for sharing your honesty, that kind of thing. I'm very transparent when I lose. And yeah, Monday wasn't a great day. Today will be a little bit better because I'm a little bit more prepared for today's slightly bearish move so far in the markets. But Monday, I did lose, $1,500, a little bit over $1,500, and it wasn't amazing. So as far as what I do to kind of shrug off, bad days, losing days, because if you're a trader, unless you're on Twitter, of course, and you have losing days, I just review, like you mentioned, the trades I took and see if there's anything glaringly wrong. I go through my analysis because sometimes you can do everything right and still lose, right? It's kind of like if you go to the Super Bowl and you're a football player and you play your hardest and you lose. Losing is not failing. Right? That's my definition.
Great point.
But, you can lose. That's why I don't believe in participation trophies. Like, kids need to feel the sense of loss. Like, losing and failing are two different things. We're going to lose. It's going to happen. For me, I just go out. I work on some back trading. I look at what I did wrong. I take it with strides. And unless I have a losing streak, which is more than 9 losing trades in a row, unless that happens, I don't really do anything different. I just kind of, I don't drink for sure. That doesn't work. So if you're don't hit the bottle, right? It's not going to make anything better. Usually go to the gym, work out, just read a book, try to get my mind off of it, and just do it again tomorrow. And it worked out really well because I went back up. I mean, between today, Tuesday, Wednesday, and Thursday, I got it all back and a little bit more. So we'll see what today brings. If I can do well today, I'll have a profitable week.
This is an interesting conversation. I'd just like to continue the conversation a little bit too. I have traders, and there's traders, and I've heard this, I've even read this in trading books when I first started. They said, when you hit your max loss for the day, like you lose, whatever your max loss is, of $500, $1,000, $2,000. When you hit your max loss, and maybe for small trades, maybe it's $100. When you hit your max loss for the day that you stop trading and then go to the next day, I can see it both ways. I think for a newer trader, I think that works well. For me, because I've been trading 20 years and I feel like my edges are proven, I never stop trading. So even if I get to a point where, I don't have like a max loss on the day per se, if I was struggling with the psychology, I might take a step back, reduce my size, but I still want to stay in the game. So I think the way I do it when I'm struggling is that I actually just reduce my size a little bit, but I'm still keeping my feet wet. So I'm still out there. So, maybe I'm struggling, so I'm not losing as much money, but I'm keeping my feet wet there so that I've still got the feel going, because I feel like when you just step back and take the rest of the day off, it's almost rewarding yourself for failure. I think you should be, at least stay in the game. How do you deal with it? Do you have like a max loss on something like this, or, or do you kind of just fight your way through it?
I love your perspective, and I will remind everyone who's listening that Dennis is a robot. So I'm not entirely convinced that you're human, Dennis. That's a compliment in every way possible.
I got a microchip in my head. It's an Nvidia chip.
I do, yeah. My max loss presently is $1,500, and
Okay,
I can do like a little bit more than that, like if I get slippage or have a swing.
Yeah.
But so I think that day was like $1,800 because I had some swing trades that also got stopped out. But it's pretty much like that $1,500 mark. If I hit it, it's like, hey, cool, man, it's just not going your way. Take a step back.
Yeah.
And so I did trade futures that night. So that's the thing is I'll take a step back, but not like 100% done from trading. I just leave. I leave the computer. I get out of the station. I just go and do something else, just get my mind off of it. Come back, review, see if I didn't do anything wrong. I was like, no, dude, I still think we're going to bounce. I was like, this gap is an overreaction to whatever it's overreaction to. I'm not sure. It's a tariff thing or whatever. I don't know. But there's no way the SPY is going to end down 3.5% on a Monday and just keep going lower. Because what's I going to do? Go down 10% in a week? I mean, it could. But how often does that happen? Like one time in the last 10 years. So I just don't stress about it too greatly. And if it did continue lower, I was going to get embarrassed. I was going to ride the storm. If it did continue higher, which I thought it would, I was going to get in long, and that turned out to be the right call.
And interesting perspective on the good day, bad day thing, because my best day at Bright was also at one point I was at my max, and I just said, okay, I had a setup that I'd really had been working on, and I said, okay, I'm going to try it one more time, and it ended up working out. And that just happened to be an unusual day in the markets. That was when the market just fell out of bed in March. What was that, 2000, Dennis, when tech exploded? So
those were different trading days. You saw 20% move on individual stocks with no news, like on a regular occurrence. Those trading days were crazy. I mean, Amazon trading it back then. Remember the Todd guy? And we're going to go back to Jeremy in a second, but he would be like trading that Amazon and buying it at like 60 and then selling it at 80 in the afternoon. And there was no news. It was just moving around like that. The volatility, like if you think we have volatility now, it was nothing compared to the year 2000. The volatility was incredible.
That's amazing. Yeah, I was only 12 during that time. So
but you could have traded when you were 12. You're a pretty smart kid. You should have got the computer. I think Jeremy Newsome could have did it when he was 12 years old.
I could. I needed you to teach me, man. If you were there to
I'm trying to teach my 4-year-old, but he's still getting the buy and the sell buttons.
Love it.
So
amazing.
Jeremy, where are you shorting BIDU today? You got it. It's a gap. It's a gap down, right? It's a gap down.
Yeah, it is. It is.
A little too much.
I'm going to lean more towards shorting IQ than BIDU. Just because it's down a little bit less. Just because it's down a little bit less.
Okay.
Because BIDU's down 13%. Like that's
yeah.
But I probably will look to short it. You're correct. So
talk about a setup on IQ. This is interesting.
Yeah. So IQ, they actually had really, really good earnings, I thought. I mean, I thought they were kind of solid. 58% subscriber growth. Like that's no slouch.
I want to stop you for a second because I'm starting to love this setup. So he says, I think the earnings were pretty good, and you're still talking about shorting the stock. So I love this. Go on.
Yeah. So the thing is, I mean, a lot of other people are going to think earnings are good too. So people holding the stock, they're going to be like, "What the heck's going on, man? Why is my stock down? Earnings are great. This is dog crap." And they're just going to start throwing it out and selling it. And I'm just going to pile in with them. So if it starts breaking 1887 on IQ, I'll be looking for shorts. And I do expect that could go a little bit lower. And BIDU, yeah, on a pullback, I'll be looking to short it maybe up into 136 if it pulls back that far. I'll look for like an early morning bullish pop on BIDU and then probably a rollover. It's a pretty gnarly gap, man. You're down below. If you're a moving average fan, there's no moving averages on BIDU at all.
They're way high. They're way up.
Go to the monthly chart, Dennis. The monthly chart. There's nothing under BIDU. So I have no idea how low this thing's going to go. No clue.
So you look at, you know, a little, you know, maybe a little rally there, like when you get some short coming or whatever, and that's where you sell it. So you wait for like a little wash
Yep.
up, then a rally back, and then strike type deal.
Yeah, exactly. On this one, because she's down, you know, right now 13%. Short sale restriction will be turned on. China's already getting beat up. You already had some shorts, you know, this last week and the week before. So yeah, I'll be looking for some short covering and then a rollover because I do think it will continue down a little bit. I'd be semi-surprised if it just opens and rallies, even though it wouldn't massively shock me. I think it could easily get down to 132 today, maybe a little bit lower before it gets any kind of good bounce.
All right, we're on the line with Jerremy Newsome, Real Life Trading. Just to take a look at a few other stocks here. I know you were in a Tesla sell and put mode a while back. Are you still sticking with that strategy?
Tesla, man, some serious implied volatility. I love this gap down, guys. Tesla very well might hit 187 today. It could have like a 40-point sell-off, man. I'm not even kidding. Like, this is a serious gap. And the news on it out there is a little bit bearish.
Looking for cost. So give us that headline, just Spencer. Are you in the background there? I did see the headline last night. Musk looking for.
Are you referring to the quote a hardcore cost cutting effort?
Yeah, I think so.
Yeah,
that looks scary to me.
Came out. Yeah, that came out. I posted that on Twitter last night. I was like, what do you guys think about this news? Like, I don't think it's good short term at all. Now, long term, I think Elon Musk is going to change the entire world. I think he's an incredible human being. He's also a robot like Dennis. Like, so he's not a real human.
That's why I like him.
But yeah, I'm full bear on Tesla at the present moment. I do have some put sales, Joel, but be okay because they're at $40. So if Tesla goes down to $40,
you got premium at $40?
Dude, go check it out, man. January 2020. A few weeks ago, I got $1.70.
Who's buying a $40 put for $1.70 on Tesla?
I have no idea, but I sold it to him. I said, "Here you go, man."
$40, not 140, 40.
A lot of people think it's going to go to zero, man. They think it's going to go bankrupt in the next 10 months because Musk did say in that newsletter
it would get scooped
we got like
up. Somebody would scoop it up, I think, before it got to under that. Just for the technology.
Totally agree. Yeah, totally agree. So that's the bet I'm taking is, hey man, I'll own Tesla at 40. Like, I will. And
I want to write those puts too.
40, you'll own it in what? 38, 30.
38.30. That sounds
bingo.
good.
Bingo.
You want to know? This is because remember my buddy Chris Bandy, who's a prop trader. We might go long here, Spencer, because we're getting into conversation here. But he was the original like Tesla bull. Like, he told me about this Tesla when it was $30. Going back, you know, right basically when Raz was buying it too back in 2012. And he's like, this is the stock. This is the stock. And he made a lot of money buying. He bought a pile of calls, a pile of stock, and the stock went from, you know, 35 up to like 80, you know, over the course. And I think, you know, he had obviously started lightening up in there, and maybe, you know, got out, but he made his money on it. I mean, I'm getting back in like Chris Banier pricing here at $37. This is good pricing. So maybe I'm going to come and write some puts with you.
Yeah, man, consider it, especially after today, because we'll probably get a little bit more selling on Tesla. It is definitely a little on the bearish side, but I don't expect, honestly, for Tesla to go down to $40 by January. And if it does, for some crazy reason, I'll probably just put some shares on there and be good with it. So,
I mean, just think about it. You know, you got Tesla with all this technology, and, you know, there's a lot going on, obviously, but all this infrastructure they've built in. You don't think like some, you know, like an Apple or something, if it's this got down like $50, like the people who are saying it's going to zero, this thing is down like $40-$50. You don't think Apple goes scoops it for 10 billion? I mean,
I think so.
I think so too. I think it gets down to like $8-10 billion market cap. I mean, we're talking really ridiculous scenarios here. But, you know, if you think it's going bankrupt and you really believe it's going to zero, I think it gets scooped before it goes to zero. I think they would come in and scoop it up.
Dennis,
maybe one of the other auto companies comes and scoops it up.
You get $40. We might have to. Hey, I just want to ask you real quick. We're keeping you a little bit long here, and I know you got to get
okay.
over. How about these IPOs, huh? I mean, are you?
Oh my
are
gosh.
you eating a lot of P burgers, or what? What are you doing? What do you think of these? Is this crazy or what? I have no idea how to trade these things, but just talk about them. You know, you got
Beyond Meat.
pin interest here down 537. Oh man,
Yeah.
just talk about this IPO trading.
Dude, let me talk about this for just a quick moment. So first of all, Pinterest. Tomorrow, I have a Benzinga presentation that I'll be discussing how to trade gaps over 20%. And we're going to be discussing with Pinterest and a few other gaps this week and how to trade them and get some really good insight on that. So for everyone listening, make sure you register for that. It's going to be through Benzinga tomorrow, and it's going to be a really incredible presentation. Number two, IPOs, you have to be a master at candlesticks to trade IPOs. And that's my specialty. So I love trading IPOs, man. Because the only thing you have is candles, right? There's no support resistance. There's no indicators yet. There's no moving averages. It's just candles. So I trade them pretty aggressively, you know, normally bullish because you can't short them. So I just look for bullish entries. And if I don't get them, then I don't trade them. But I did play Lyft. We played Lyft bullish not too long ago, 2 or 3 days ago. I'm currently in Beyond Meat right now, long. My target's $100. My target's $100. Good man, those P burgers are delicious. So just letting you know, they're legit. And Pinterest, yeah, this particular gap down is pretty gnarly, and I'm looking for Pinterest to kind of form a small bullish candle today, potentially, and then a continuation next week because this gap is serious. But Pinterest did actually pretty good. I mean, they did have revenue. They, you know, were losing a little bit of money per share, but, you know, losing more than Wall Street thought they would lose, but they made more than Wall Street thought they would make in revenue. So it's going to be an interesting play on Pinterest. Longer term, though, I actually do like Pinterest. I think that's a really, really interesting concept and a fun IPO for a longer term play. I have one guy, Joel, a friend of mine, a client, who buys $1,000 of every IPO at open. And that's it. That's all he does. That's his whole strategy. If it goes to zero, he loses $1,000. If it pulls a Shopify, Square, Workday, Wix, HubSpot, he's pretty happy.
Interesting strategy.
All right, Jerremy Newsome has been on with us for the past few minutes. If you want to hang out with him and learn more about his strategies, like I mentioned, he will be at the Benzinga Trading Summit June 20th at the Sheraton Times Square in New York City. Jerremy, as always, thanks for the time, and we will see you in a couple weeks.
Yeah, we'll be working on Saturday, Jeremy. How about that?
And tomorrow, you got your webinar.
Tomorrow.
Yep.
Boy, are we
Yep.
dedicated?
See you tomorrow in the webinar, and then
All
I'll
right.
see you beautiful gentlemen on the 20th in New York City.
All right, and I just put the link to that webinar in both the chat rooms. So if you don't know what he's talking about, it is in there for you right now. On that note, that'll be it for today's show. I do want to mention that I got chastised yesterday when I gave the promo code. I should have mentioned that it's case sensitive and they're all caps. So promo code to get 50% off is still good. All caps PMP50, capital PMP50 will get you 50% off any ticket, including to the premium trading lounge where Jerremy, Dennis, and Joel and others will be going through their trading strategies. So PMP50 is still good. Also PMP15, if for whatever reason the 50 doesn't work, the 15 will work as well. Get 15% off to any ticket to the Benzinga Trading Summit. And
The bleakness. I gotta.
give us your picks. Go for
Give
it.
us your pick. Well, real disappointed. I mean, obviously, the horse was taken down, maximum security. The horse that came in second is not even running in the Preakness, so no chance of a triple crown. I don't like the horses from the Derby. Improbable. That's Bafford's horse. He was fourth in the Derby. He's going to be your favorite. War of Will coming out of the one hole. He got bumped. He was part of that interference in the stretch at Churchill Downs. So if he runs a clean race, he has a shot at it. But I'm gonna go with the long shot here, and a long shot it is. Always Mining. And the reason I like that horse is couple reasons. One,
a Bitcoin horse?
no. Oh, Dennis, you're supposed to be off it.
Oh, yeah, sorry.
That was a singer. That was really good.
Okay, go back. Sorry, he's totally lost his train of thought. He was in the groove and I just messed everything up.
Tacitus is out of the race. I'm going with Always Mining. Hot Hand. He's won 6 races in a row. His last win was at Laurel Park by 11 lengths. And he's a speed horse. It's one of these scenarios where he's got to get out. Like sometimes I'm watching these races and I know I have a shot. I don't have a shot. This guy's he's got to get out in front, get on the rail, and just hold on. It's a little bit short of a race. So I'm going with Always Mining, and I hope he goes off at like 8-10 to 1. But that's my pick.
All right, that's our show today. Thanks to everyone who joined us both on YouTube and premarket.benzinga.com. You can catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, Google Podcasts, or just rewatch the show on our YouTube channel. Thanks again to Jerremy Newsome. Everyone have a good weekend. We will see you on Monday.